And the fact that nowadays we rely too much on antibacterial creams, and we're creating children who are not immune to these issues, to bacteria that our generations, even yours that are younger than mine, were, if it makes sense.
Yeah.
Is that correct? Cool, guys. Thank you very much. Thank you. Sorry that we are right on time today. See you next week. Have a good. Thank you for all the interesting presentations. Thank you. One thing, guys, if you have missed a class and have not justified to leave your email, make sure that you do so, all right? You will not get marks for that week without any justification. Sounds good?
Thank you. Is that for just
one day?
7, or is that for all of them?
The ones that had an activity in it. So from 4 to 7.
Can I check? I just think it was for you. Is there anyone waiting for us?
What's this?
There was a lady that
What's yours?
This is attendance. And this one.
Yes.
This.
Now on to the next group, so put one down. I got one tomorrow to do.
Oh, it's that time, isn't it? It's better than exam, though.
Huh?
It's better than exam.
Oh, I don't know about that. I think I'd rather sit an exam than do that. I get so nervous. And I skip so much crap.
Wait, what?
I'm so sorry if I didn't get so Thank you. Sorry about that.
Okay, so this is 6.4, this is your homework. Remember, we have to do our cash flow and we've got to work out what we're reconciling to. So if you read the balance sheet, so your statement of financial position, you've got 2 years, check that the dates, the one 2019 and 2020, check their positioning. What's the current year, what's the previous year? All right, make sure you get that one right. Because if it's the other way around, your pluses and minuses are different with the increases and decreases. So make sure you just double check that because it does happen from time to time. So have a look at what are your cash and cash equivalents. So look at the balance sheet. We've got cash at bank. There's no other short-term money market. There's no bank overdraft or anything. So that 43,000 is what we're going to reconcile to. Right, so that movement of 62,000 down to 43 means that we're going to have a net outflow, doesn't it? So when we get to the end, we're going to have an outflow. So we've got to work out what have we got coming in and what have we got going out. There's movements in there in your receivables and your inventory, your land as well. So what does the additional information tell us? It doesn't tell us. It says there was some extensions paid for and a block of land costing 37,500 was sold for cash. So circle that 31,250 because we got some Is that an operating, investing, or a financing activity? What do you think it is? No, you're selling land. So remember, operating is your normal day-to-day. Investing is stuff to do with your non-current assets, and financing is where do you get your money from? Have you issued shares or debentures or something? So what is it? What's the land? Yeah, big circle and put investing next to it so we can fill that one in straight away. So remember, when you get into the exam, there's some items that you can quickly put under your headings, all right, and get them in there. You don't have to do it all bit by bit. There are some that you can just do quickly, put them in there and then tick them off. All right, so no plant was purchased or sold during the year. Okay, but we do have a variance there in depreciation. There's a movement in accounts payable. There's a long-term loan. All right, there's an adjustment there in your employee benefit, so we know that we're going to have to account for that as part of our payments to our suppliers and our employees. All right, so we know that we got a 43,000 there. So our profit and loss, our profit for the year, 31,250. We've got sales of 443,500, and we've got cost of goods sold there of 28,300. We've got employee expenses, interest expense, loss on the sale of land. All right, so if we've made a loss on the sale of land of 6,250, remember, a loss means we've received less than its carrying amount. All right, we know what the cash amount is, but if you just do a double check there, the original cost, 37,500, minus the loss, 6,250, equals the cash you received, the 31,250. All right, so it's a double check, because sometimes they may not tell you the amount, but you can work out the amount based on its original value, and if you've made a loss, you must have received less. If you've received a profit, then you must have received more than that carrying amount. Okay, so let's have a look. So we've got to have a look at our operating cash flows from our activities. The first one, our cash receipts from customers, 435,000. So we're going to recreate our accounts receivable account. So you've got that there. Now you've got your opening and closing balances. So remember, with your accounts receivable is an asset. Opening balance is on the debit side of your T account. Closing balance is on the credit side. We've got sales of 443,500, so you can tick that off out of your P&L. Right, and the difference, so this is the debit side is the bigger column, add it up, 519,500, flow it through to there. The difference, the 435, must be the cash component. What are we missing from this one? We're missing the potential for discounts and any bad debt write-offs and things like that. So remember, if there's any adjustments there for that, you might need to account for it. We'll do that in another example. Right, so make sure you write lots of notes for this one, because I've got another question for you, which is a little bit bigger that I want you to try and do on your own in a minute. Okay, so we've ticked off the first 435,000. Again, if you want to use the formula, you can use the formula. Remember, all the formulas start with the profit and loss. So it starts with your sales, right, and then you minus the increase in your accounts receivable to give you the 435. Okay, so next we've got to do our cash paid to our suppliers and employees. So we've got an outflow there. So it's a payment, so we've got a negative amount. We're showing it in brackets, 369,750. How do we get that? We have to recreate our inventory and our accounts payable. So let's go to the next slide. Everyone all right up to there? Okay, so our cash paid to our suppliers and employees is made up of two amounts. We've got 266 and 103. So we've got payments to our suppliers, so we recreate our accounts payable, and then our employees, so we've got to recreate our provision for employee entitlements and look at our expenses. So with our inventory, remember, inventory is an asset account, opening balance on the debit side of your T account. 124,000, balance carried down 113,000. We've got cost of sales 283. So you can tick that off, your profit and loss now as well. The biggest side is on the credit, 396,500. Take that through the debit side, meaning we've got purchases there of 272,500. We need to flow that through to our accounts payable. Accounts payable is a liability account. Opening balance is on the credit side. 60,500, closing balance of 67,000. Okay. On the debit side, our credit side is the highest. We add the inventory that we bought over to our opening balance, gives us 333,000. Take that over to the debit side, the difference there, 266. All right, that is our first cash component, so our cash payments to our suppliers. 266. We've got another amount in there, 103,750, which is a payment for your employees. Okay, let's go to the next slide. So we've done that. Now we go here, our provision for employee benefits. All right, go to your balance sheet, have a look at your opening and closing balance. You've got an opening balance of 8,750 on the credit side, closing balance of 3,000. We've got employee expenses from the P&L. Our employee expenses straight from the profit and loss of 98,000. Highest side is the credit side, add them up, 106,750. That needs to balance out, meaning our cash paid, all right, to our employees is the 103,750. All right, add those two together, gives you the 369,750. Now, if you wanted to use your formula, remember, when you're using the formula, always start off with the figure from your P&L, which is your cost of sales. Add on your employee expenses, minus out the decrease in inventory, minus out the increase in your accounts payable. Add the decrease in that provision for employee benefits, will give you the same result. All right, but again, I still think it's easier to use the T accounts. Right, you have to make sure that whichever method you choose, right, that you learn it and that you learn it well, and you don't learn the simple version, make sure that you learn the longer version of the formulas if you're going to do the formulas. Okay, so we've looked at our cash receipts from customers, cash paid to suppliers. Add those two together, or you minus the payments from your cash receipts, gives you 65,250. Now we need to separately show the interest paid. Right, we need to review our interest payable account. Now, if there wasn't an interest payable account in your balance sheet, you just take the amount straight from the expense. Right, but we have got an amount payable, so we need to pop in the opening and closing balance, put in the expense into our account. So we've got 5,000 in there as an expense. We've got an opening balance of 750. We've got a closing balance of 250. Therefore, we must have paid 5,500. All right. Sorry, too quick. So remember, when you're doing the cash flow, essentially you'll eventually go through every single line item on your P&L and on your balance sheet and tick them off. All right, even your retained earnings and your share capital as well, because you might have issued more shares or you might have paid dividends. Okay, so that's your operating activities. Now we've still got our investing and our financing activities. Okay, look at our investing, proceeds of land. We can pop it straight in there, the 31,250 from item B in the additional information, 31,250. Payment for buildings. Right, if we have a look at our buildings, the opening balance there is 137,500, right, and the closing balance there is 265. All right, if we look at that, the difference there, you don't need to do the T account for that, you just do the difference, which is your 127,500. All right, recreate the land just to make sure that there's nothing there. You just minus out the land sold to make sure that no new stuff was purchased. All right, tick, tick, they were quite easy. If there was anything else in your assets, so have a look in your assets to see, and your liabilities, if there's any other items in there that you think might be required. You know, maybe a loan or a debentures or something like that. If there's been an increase in the loan, that would be an inflow. All right, if it's an outflow, maybe you're paying one off. All right, so that goes under your financing activities if you had additional bank loans or debentures. So proceeds from borrowing, so 21,250. Let's have a look. We've got a long-term loan, opening balance 45, closing balance 66,250. We haven't got any extra notes on it, so we must assume that that's cash proceeds. So we've got an inflow there of 21,250. Dividends paid, we're going to have to recreate our retained earnings account. All right, remember, retained earnings is an equity account. The balance will be on the credit side, your opening balance, so 172, your closing balance of 199. Pop in your profit from the P&L, the 31,250. Add your credit side, it's the largest side. It doesn't balance, it means you must have paid dividends. Remember, there's two sorts of dividends. There's an interim dividend and a final dividend. So you usually have an interim dividend from the current year and a final dividend from the previous year. Okay, pop it all together. Add them up with our net decrease. So we knew we had to have a decrease because our opening balance has gone down. Right, add each one together. We've got a net decrease there of 19, your opening balance of 62, give you the closing balance there of 43. All right, so pretty straightforward, nice easy one. Now let's do a hard one. Time. Hang on, let me just check. Okay, a couple of pages in, there is a little pro forma in there for you. Sorry, I did. You don't have to, you can use the formulas if you want to. If you know how to use the formulas and you're not going to miss anything. The formulas are definitely quicker, but you have to learn them. I like to do the T accounts because I'm a visual learner, but not everybody is. Some people are really good with figures and they remember what to plus and what to minus, and as long as you've got it written down to jog your memory on your page of notes, then you won't forget. But you can't, just don't.
Makes more sense. So I was saying, like, we're not going to get the
No, you will have to do the direct method and the note. Yeah, the direct method and the note, because I've told you. Because that's what people do in the real world. Right, so... So in front of you, you've got an income statement and a balance sheet, and you've got additional information there. So this is quite a long question, so we're going to have to just do what you can and do it bit by bit. Over the page, on page 4, see I've given you your little cheat sheet that I reckon that you should shrink and put it up in the corner on your little notes that you're allowed to take into the exam. So this is something that you're allowed. Yep, you can put whatever you want on your sheet of paper. You can put whatever you want. All right, you can put a whole question on there if you want, you know. But I mean, it's your space, it's your decision what you put on there. You know that you've got a cash flow, so I would dedicate one whole page to cash flow, because that's 50% of your exam. Unless you know what you're doing, then you can put other things on there. There's no real theory questions in there. The only theory that you have to understand is the theory behind the practical, right? So I'm not going to ask you define this or describe this or write me an essay on anything, right? Sorry? No, you don't. You're allowed to take in a page of notes, writing on the front and the back. So this is what I'm saying. You can take this in, you shrink it. So just sort of use your computer, take a photo of it, or use them from the notes and copy it in and shrink it to the size, a normal reading size, not size -1 font, so you can't read it in the exam. You're allowed a page of notes, writing front and back. I would dedicate one whole page to cash flow if you need to. Then you've got another page on the back that you're going to have to answer other questions. So you know you're going to have a consolidation question, which is worth 15 marks. You're going to have another disclosure question, which is worth 10 marks. So I would sort of cut it in half or do it whatever. Do whatever you need to do in terms of what you don't want to have to rely on your memory for, right? What you want to do is you want to learn what you need to do and the processes and the steps and get yourself into a good rhythm when you're approaching it, and then don't stress out if it doesn't quite work, right? Because then you just go back and then I would, just look at the section. So the investing and the financing are usually a bit easier than the operating. So I would just make sure that they're right. And remember, we have consequential marking. So you must make sure everything adds up. Even if it's wrong and doesn't add up to the cash figure that you think it should be, you just make sure you add it up to the figure that you've got. You can put a little note under there saying it should be 43,000, but sorry, I only got to 39. I couldn't quite reconcile it. You can put a little note there, but you make sure everything adds up. If you don't make it add up, you're not going to get marks just for writing in a figure. All right. But if it's wrong and you've got pretty much 90%, if you've only got one thing wrong, you're just going to lose the mark for that one thing, because there might be 3 figures you've got to add together for your operating activities, your payments to suppliers and employees and that kind of stuff. There could be 3 figures there that you've got to add up. Let's say you've got 2 of them right and 1 of them wrong. You're just going to lose the 1 mark for the one that you missed out or got wrong. So that's maybe minus 1. It's out of 25. You could still potentially get 24 out of 25. All right? So even though as you move through you've got other figures wrong, you won't get marked wrong. You just lose the mark for that, as long as you add it up right. Okay, so you've got little summary, you've got your basic template, you've got some spaces for your T accounts. Step 1, what's your cash and cash equivalents? So have a look at your balance sheet, see if you can work out what your cash and cash equivalents is. All right, so remember, you're primarily looking at your current assets and your current liabilities. All right. And there are figures in both. All right, see if you can work out, see if you can work it out, cash and cash equivalents, tick it off, and then say this is the figure I'm working to, and I'll walk around the room and see if you've got that bit right. That's step 1. Step 2 is you've got to decide whether you're going to do your operating, investing or financing activities, and then start working through it and start filling in the gaps and filling in the T accounts. Right, the last bit I've given you the answer to on the back anyway, because we're not going to get time today, probably, to do the whole lot. But this is the kind of thing you could get in the exam. All right, may not be quite so long, but if you can do this, remember you've got 2 hours and 10 minutes, it's worth half. So technically you should be able to do something like this in an hour, which includes full preparation of the cash flow and the note that I've given you the answer to. All right, so just bear that in mind. You don't have to rush today, just go through the motions, right, and see whether you can, what components you can work out. All right, and then you need to start thinking about your strategy because it's week 12, not long to the exam. So today you need to be thinking about your strategy. How are you going to approach it in the exam? So use this as study. All right, now. Because we don't really have a long time left, we've really only got about 20 or 25 minutes left, so it's going to take a little while to go through it. All right, so online you can have a look at the indirect for 6.4. You can do that on your own time, so make sure you look at that one. And now this one is the Kongzi question. So on your handout there on the last page, I actually gave you the cash and cash equivalents. All right, but you need to, it may not just be the bank account. It also could be a bank overdraft, making it a negative figure. This example, we've got bank bills, short-term investments, and a bank overdraft. Notice the bank overdraft is taken off. We're reconciling to 101,000. Okay. Number 2, we're going to have a look at the, your job would be to look at your balance sheet and have a look at the movements and all your other items. So have a look at all those items just to see what's going on and make sure you notice that there are movements in between them. And then if you notice those, look at the additional info, see if there's any that marry up. And then you know that you've got operating, investing or financing items. All right, we're going to read the additional information and then make some notes. So for the first part, you need to remember with your accounts, your cash received from customers, you need to recreate your accounts receivable and your bills receivable. You can put the two together. All right, and we can join the prepaid and the accrued expenses into one as well. We can also join the current and deferred tax accounts into one account, so we'll show you how to do that just to make it a little bit simpler. Remember, there are 2 types of dividends. There are interim dividends, right, and then there are final dividends. All right, so let's have a look at our cash receipts from customers. So our figure there is 912,000. How do we get that 912,000? We need to recreate our accounts receivable and our bills receivable. All right, so both of them are asset accounts. We need to put our opening balances for the 2 accounts together. Opening balance for accounts receivable, 80, bills receivable, 8. Closing balances, 75 and 12. All right. We also need to make sure that we add in our sales from the profit and loss. All right. We also need to account for the discounts allowed because that's cash we haven't received, so that's straight out of the profit and loss. And we've got bad debt write-offs there of 4,000 as well. All right, sometimes you might need to recreate your allowance for doubtful debts to work out the bad debts. That bad debt, let's have a look. In your profit and loss, we've got our discounts allowed there of 5,000. Now over the page, when we're having a look at our notes, we're going to recreate our allowance for doubtful debts. So our opening balance there is 4,000, closing balance is 3. From our profit and loss, our doubtful debts expense is 3,000. Therefore, our bad debts written off must have been 4,000. Right, the difference in the cash component we worked out there's the difference in there, it's 912,000. And as I said before, this one's a little bit more complicated, a little bit longer, because we've got two lots of receivables that we're accounting for. We've got discounts received and we've got bad debts. All right, so if you can do this one, you're on track. So you might need to go back and make sure that you can go through this one and do it all. Okay, so that's that one. Okay, next we've got to look at our cash flows from operating activities. So our cash flows from operating activities, the total amount that we're going to work towards is the 651,000. It'll be made up of two components, which is your 544 and your 107. So we know that we've got supplier amounts. We have to recreate our inventory and accounts payable. Then we have to look at all of our expenses, right? And with that, we're going to have to look at our prepaid expenses as well. All right, so this is why I gave you a hint at the beginning that we're going to join a couple of accounts together, because in your profit and loss, right, it groups together. We've got interest expense, we've got other operating expenses, right? So that's everything else. So what that means is that the additional accounts that we have to sort of group together so that we can put the other in there, unless we are told what that other is made up of. All right, so we are told some of it on the additional info. But let's look at our inventory. We've got an opening balance of 87, closing balance there of 92. We've got cost of goods sold of 540, and we've got an inventory write down there of 2,000. That inventory write down, that's something new, isn't it? All right, that comes straight out of our P&L. Remember I said as you go through, we're going to have to include every item from our balance sheet and our P&L as we're working through looking at the movements. So where would that go? It's an inventory write down. It legitimately goes into our inventory account. It's a write down. Inventory is an asset. To write it down, it must be on the credit side. All right, leaving us purchases there of 547. Right, that flows through to our accounts payable. If you have a look at your balance sheet though, we've got accounts payable and we've got bills payable. So we're going to join the two together. It's a liability account. The opening balances of the accounts payable and bills payable is 50,000 and 11,000. On our debit side, our closing balances are 45 and 15. We flow through our inventory amount, but we've also got discounts. Right, so in our P&L we've got discounts received, so we need to make sure that we get that into our accounts payable. All right, account for that discount there. This is our biggest side, adds up to 608. Flow it through to the debit side. The difference is our cash component there of 544. All right, which is the first part of our 651. The next bit is where we have our prepaid and accrued expenses. So some of them are assets and some of them are liabilities. Make sure you get your opening and closing balances on the right side. All right, so if we have a look, our prepaid expenses are an asset. So we're going to have an opening balance there of 6,000. We're going to have a closing balance there of 3,000. Right, we're going to have our accrued expenses. We've got some annual leave. All right, closing balance of annual leave, 21. And we've also got, we have a look at our liabilities. So we've got accrued expenses, and in our note, we've got annual leave and advertising, opening and closing balances in note V. All right, so we pop in those closing balances there. We've got our other expenses. Now we've only got 113,000 in there, but in here under other expenses, we've actually got an amount there of 200,000. So how do we get that 113,000. So this is where it gets a little bit complicated. So we'll go into that in a minute. But let's pretend we really know how that's been calculated. What's the difference? Our cash component is 107, so that's where the 107 is. Now let's work out what our other expenses are. So other expenses include depreciation. So our operating expenses include depreciation and impairment losses, so they need to be removed. So it starts off at 200,000, minus out our machine depreciation and our motor vehicle depreciation. There's also some goodwill impairment, all right, because it tells us in the question here. You're going to have to go back over that. So in here, in the, where are we? The goodwill, the accumulated impairment losses, the difference between the goodwill, the 50 and the 60 is a 10,000. All right, again, that's something new. All right, because what you would need to do, remember, you're going through each item on your balance sheet, bit by bit, and that impairment needs to go somewhere in the profit and loss. That goodwill impairment is sitting under your other. Right, so it's been impaired, so we need to impair the goodwill, we need to, our impairment losses, we need to credit that and we debit the expense. That impairment loss is not under any of the items under the left, so it must be under other. All right, when goodwill is impaired, there is an increase in your impairment loss and an increase in your expense. So there's a debit to the impairment expense and a credit to the impairment loss account. All right, so that provision for impairment. So that is sitting under your 200,000. All right, so that's something new. All right, so remember in the exam, I won't give you anything that you haven't looked at, but you need to be able to apply a little bit of logic of where these things are. All right, so that there is something that's in this question that's thrown in there, but most of the other things you should be able to clearly identify where that movement is, because every movement, every debit has a corresponding credit, so it's got to be somewhere. All right, so it must have been in there. So we've got our depreciation for our machine, depreciation for our vehicle, which we can recreate when we recreate our depreciation accounts for our vehicles. So because we need to do that anyway, because we've got a new machine that we've bought and we've ridden some off. Okay, so we're not quite finished. Got quite a bit to go through. So we might have another look at that next week after you've had another chance to look at it and go through it again. All right, so make sure that you review it after you've finished all your assignments and everything, and hopefully before the next class, because next week's actually an easy class. All right, next week's an easy class, so it's pretty light on with homework. There's only some really basic sort of case studies and stuff like that. Might give you another cash flow in class, might not. See how we go. All right, I always make this week and like the corresponding homework for next week, because I know that everybody around week 12 in particular has always got loads and loads of assignments due. So, okay, we've got to separate out our income taxes and our interest, right? So our accrued interest, we've got an opening balance of 3, closing balance of 5, we've got an interest expense of 12. The difference there is 10. So we've got an interest payment there of 10,000. Income taxes, this one, we've got several tax accounts. We've got deferred tax assets, deferred tax liabilities, and we've got a current tax. We need to make sure that we get our opening and closing balances on the right side. Deferred tax asset is an asset. Opening balances go on the debit side. Deferred tax liabilities, opening balance go on the credit side. Your current tax liability, opening balance on the credit side. All right. Then you've got the amount of tax paid, right? Your income tax expense on the credit side. Make sure you get them all on the right side, add it up to work out the amount of cash paid. All right, the amount of cash is $35,000, so you'll need to go through it and make sure. And this is where, when you start to have multiple accounts like this, right, this is where you can get it wrong in the formula, deciding whether you plus or minus increases or decreases. So this is why these T accounts, all right, are easier. All right, in my opinion, the way you get it wrong is if you put your opening and closing balances on the wrong side, right? But that's actually quite easy to pick up, right? But you just have to be very methodical when you're putting those balances in there where you've got multiple accounts, right? So we're always going to get it with our taxes, right? And then when we've got expenses that are all grouped into one, like other expenses, then we know that we might have a number of prepayments and accruals that we could group as one. All right. In the event that we have all the expenses separated out nicely and neatly, we can have multiple separate accounts to the cash components for the individual amounts, whether it's rent or advertising or whatever. You can do them all neatly and separately if it's all separated out. And then anything that you haven't ticked off in your profit and loss must be a cash. If there's no accrual or prepayment, it must be a cash payment. Okay. So we've got that. Your cash in operating activities, $216,000. Now our investing activities, we've got purchase of shares in AMZ. So we've got note number 4. They've purchased shares for $11,000. It's an outflow. All right, so it's a negative figure. Proceeds from sale of investments, $18,000. So we've got our long-term investment account. So you have a look at your balance sheet. You've got your long-term investments under your non-current assets. You've got an opening balance there of 50, closing balance of 53. Right, cost of investments sold, $8,000. That was in one of the notes. Actually, it's in the gain on sale. All right, we have got a gain on sale of investments there of $10,000. So if we have a look at our movement between our 50 and our 53, all right, there's a 3,000 difference, and we've got a gain of 10. That doesn't add up. Why doesn't it add up? Sorry, give us a second. Oh, the 11,000. We know there's cash component here of 11,000. Item 4, we've purchased 11,000 more. All right. Sorry, what was that? Did Prem pick it up? Yeah, sorry, I just had a brain dead moment because I'm allowed to. We purchased 11,000 more, so this side is the greater side, 61,000. It's got to add up, meaning that we must have sold 8,000. When we go back to our P&L, we've made a gain on sale of investment, right? Because we've made a gain, if the cost was 8 and we've made a gain of 10, the cash component must have been 18. Okay, because in the P&L it says we've got a gain on investment, therefore we must have received more than what it cost us to sell. It's in there at 8, therefore 8 plus the 10 is 18 to give us the gain on the sale of the investment. All right, the purchase of new machinery, so item 3, it tells us we've got new machinery costing $85,000 was purchased for cash. All right, there's an outflow there of $85,000. Our proceeds from the sale of the machine of $30,000. All right, we're going to have to go through our P&L and work out, we'll get to that. Dividends received. We've got dividends revenue there of 8,000 straight from the P&L, and our interest received, opening and closing balances of our T account, interest revenue of 7, cash component there must be 6. All right, so we're still working out our proceeds on sale of our machine, that's still outstanding. All right, so from note 2, it says during the year, a machine was sold for cash. The machine had a carrying amount of $39,000 at the time of sale. So in your P&L, we've got a loss on the sale of the machine of $9,000. Right, if the carrying amount was 39, the loss was 9, the cash component must have been 30 because we received less than the carrying amount. Okay, let's recreate our machinery account. Opening and closing, cost of machine sold 65, purchase of new 85. Okay, our accumulated depreciation, right, we've got an opening balance of 232, closing balance of 267. Our accumulated depreciation of our machine sold must have been 26 because our cost was 65, and if our carrying amount was 39, we must have had 26 accumulated machine on our machine that we sold. All right, so part of our other operating expenses, we must have had depreciation on our machinery of 61. So if we go back a few slides, when we were looking at that 113,000 and we were taking out depreciation on the machine, right, the other side, this isn't our accumulated depreciation. Remember, when you do depreciation, you debit depreciation credit accumulated. There must be 61,000 sitting in our other expenses because it's not separated out. All right, so if you go back to your P&L, you've got those $200,000 worth of expenses. Included in that is 61,000 on the machine. So if we go back earlier, let's go back a few. Here, when we were working out our other expenses and the 113,000 here, 200,000 minus your machinery depreciation of 61, that's where it's come from. And we've got the motor vehicle, we recreate that, and then we've got the goodwill of 10, the goodwill impairment. Okay, so let me flick forward. Back to where we were. Okay, let's have a look at our financing activities. Dividends paid. We've got 61,000 worth of dividends paid. We've got to recreate our retained earnings. Pop in our opening and closing balance. Opening of 115, closing of 189. Pop in our profit of 132 from our profit and loss, straight from your P&L. Right, now we need to work out our dividends. So let's have a look at the notes. It says here in the notes, an interim dividend was paid during the year. All right, so if an interim dividend was paid during the year, how do we work out the final dividend? Remember, that final dividend is for the previous year. So let's go and have a look at the balance sheet. So have we got a dividend payable? Under a current liability, we've got a current dividend payable there of 28,000, haven't we? Go and have a look at your balance sheet. Go down to your current liabilities. Look in the current year, so 2016, says their final dividend payable of 28,000. Right, so remember, that's what happens. It's a payable, so they will pay it. Right, so it comes out of our retained earnings, 28,000 for that final dividend. Therefore, we must have paid an interim dividend of 30,000. All right, because item number 7, B11, says an interim dividend was paid during the year, but doesn't tell us the amount. We have to work that out. All right, the first thing you check the balance sheet, is there a final dividend? All right, from last that needs to be paid. Right, what's the total dividends paid? We've got an interim dividend and a final dividend from the previous year of 31, so we've got 61,000. Okay, here we go. Our final dividends paid is 61. All right, so we've got 30,000 interim, our 31,000 from last year. We've recognised the dividend payable this year. Add it all up, it reconciles to our 101,000. The step we haven't done yet, which we don't have time to, I told you it would take a while to get through it. It's quite long, and there's a few extra things in there for you to learn, so you need to go back over it. You're probably going to won't get it all until about the third time you do it. All right, so by the third time you do it, you should be able to do a question like this in an hour. So the last bit is we need to reconcile, all right, to our cash generated from operations, which you've already got the answer to in the note. All right, so remember in our reconciliation, we're going to start with our profit after income tax. Right, you can start with your profit before tax, but then you have to adjust for the tax in your figures. All right, so if we start with it after tax, we've got 132,000. We need to we need to add back non-cash items. Step 1, add back non-cash items like depreciation, impairment losses, right? Loss on the sale, gain on the sale. It's not an actual cash component. We need to add them back. All right, so where it's depreciation, it's an expense, we add it back. Where it's a revenue item, like a gain, you need to minus it out because it's sitting in the profit figure. All right, so we need to minus out revenue items and add back expense items that are non-cash. Then we need to look at our movements in our current assets and liabilities. Only the ones related to our operating activities, all right, which are generally your current assets and current liabilities. You need to look at the movements and then add or minus. So we are going to deduct increases in assets and add increases in liabilities. We're going to add decreases in assets and we're going to minus decreases in liabilities. Do the opposite. Okay, go through that, adds up to our 216, and if we go back to our cash flow statement, here we've reconciled it to the 216. Voila. All right, so I knew we wouldn't get time to go through each bit by bit by bit, right? You need to practice it, and if you're having any issues, then you need to come and see me, highlight it, and or next week we may do another one. We'll see how we go. I don't know, do you want to do another cash flow next week where you sit down and you try and do the whole thing in front of you? All right, I'll go and have a look for another one, maybe one that's maybe not quite as complicated as this one, but I want you to practice this one, because if you can do this one, you'll be fine in the exam. If you can do this, you'll be fine in the exam. All right, but that doesn't mean it's the only one you study, all right, because there's going to be differences and you need to make sure that you've tried a few different ones. There won't be anything in there that you haven't done before. All right. Yeah. Yeah. So you can see which are the hard bits and which are the easy bits, and if I was in the exam, I'd try and do some of the easy bits first. So try and do the investing and the financing bits first, then go back to the operating. All right? So you need to make sure you practice doing this note, because we really haven't practiced that. I've just kind of given you the answer. We haven't practiced it. All right? So you need to practice that.
Would you upload those slides?
Yeah, I will. I'll pop them up. Yeah. Yeah, I think we did use an interest receivable.
We did with all the receivable.
Let's have a look.
I remember seeing. I know we did.
So we've got interest receivable, yeah. So there's a interest. Yeah, we did. Go back to